All right, so today we're going to do a deep dive into some recent comments by a couple of pretty influential figures at the Federal Reserve.
Okay.
We're talking about Mary Daly, the president of the San Francisco Fed,
Well,
and Lori Logan over at the Dallas Fed.
right.
And, well, let me tell you, they seem pretty concerned about inflation.
Yeah, they definitely don't seem to be signaling that they're going to hit the brakes on raising interest rates anytime soon.
Yeah, and it's not even just about, fighting inflation in the short term.
Right.
It seems like they're really focused on how long this is all going to last.
Yeah, exactly. Their message really seems to emphasize that we're in it for the long haul.
Right.
These higher interest rates, this restrictive monetary policy,
Mhm.
that looks like it's going to be the name of the game until we see some really clear signs that inflation is heading back down to that 2% target that the Fed is always talking about.
Okay, but have things already started to improve a bit? I mean, supply chains have been getting untangled, and that was a big driver of price increases.
Yeah.
I mean, won't that naturally bring inflation down?
Well, it definitely should help, but it's not a guarantee.
Right.
And you also have to remember that these higher interest rates, they can put a real squeeze on businesses,
Right.
and that could lead to job losses.
Yeah, so it's a real balancing act.
Exactly. It's a delicate situation.
Yeah.
It's like they're walking a tightrope.
Yeah.
They have to weigh the trade-offs between inflation and unemployment.
Yeah.
And that's where the Phillips curve comes in.
Right.
And Daly, she's really paying attention to the labor market right now and just
Yeah.
the overall economic conditions.
Right.
She seems to be saying that we need to be very careful about making any big policy changes.
Right.
So I think she's worried about doing too much too quickly and accidentally tipping us into a recession.
Right. So she's definitely seeing some warning signs out there.
Yeah, she's definitely being cautious.
Yeah. But Logan seems even more worried about inflation becoming like a long-term problem.
Right.
She's basically saying, don't get complacent, folks. This is serious.
Right.
And historically, we have seen times where inflation got really entrenched in the economy,
Oh, yeah.
even after the initial shocks that caused it were long gone.
Definitely think about the 1970s.
Right.
That was a classic example of how sticky inflation can be even after the oil crisis had faded.
Right.
And I think that's what Logan is concerned about,
Yeah.
that we could see a repeat of that.
Mm-hmm.
The worry is that if the Fed eases up on interest rates too soon, we could end up in this wage price spiral,
Right.
where higher prices lead to demands for higher wages, which then fuels even more inflation.
Right. A vicious cycle.
Exactly. A really tough situation to get out of.
So it sounds like both of them are really glued to the data trying to figure out what's going to happen next.
Yeah, they're like economic detectives.
Right. But what exactly are they looking at? I mean, obviously everyone talks about the consumer price index,
Yeah.
the CPI,
Right.
but what else are they watching?
Yeah, so the CPI is definitely important, but they're also looking at the PCE.
The PCE.
Yeah, the Personal Consumption Expenditures Price Index.
Okay.
That one's actually the Fed's preferred measure of inflation.
Interesting.
And it's not just about prices,
Mhm.
they're looking at wage growth, of course,
Wow.
employment numbers, consumer spending patterns, even housing market trends. And they can't ignore what's going on in the global economy either, because
No.
that can have unexpected effects on us here in the U.S.
Yeah, it's like a giant puzzle they're trying to solve.
It really is.
So, for those of us who aren't economists, what does all this mean? What should we be thinking about as we try to manage our own money?
Well, the main takeaway here is that the Fed is signaling that borrowing costs are going to stay high for a while.
Right.
So, if you're thinking about buying a house
Yeah.
or refinancing your mortgage or taking out a loan for a big purchase,
Right.
that's something you really need to factor in. And for investors, well, the Fed's actions can have a big impact on the stock market, so you got to stay informed.
Right.
Keep your finger on the pulse.
So it's definitely a time to be careful with our finances.
Yeah.
It seems like the Fed's decisions really have ripple effects throughout the whole economy.
Right.
We're all along for the ride.
We are.
So as we go forward, we should all keep our eye on these economic indicators
Definitely.
and think about how the Fed's fight against inflation might affect our own personal finances.
Absolutely.
Until next time, keep diving deep.